And we are live. Hello, everyone. Welcome to the 12th episode of Blockchain Talk. Today, I will be talking a little bit about the recent Ethereum update, the London hard fork, or otherwise known as EIP, Ethereum Improvement Protocol 1559. Before I start, let's take a look at the market. Its current state is closely related to what has occurred in the last week. So as we can see here, it's naturally that I start sharing my screen here. There we go. Apologies. So as we can see, market is turning nicely green, and as some of you might see here, it's in an uptick. So it seems we are in the next leg up. Let's take a look on how it's been performing today. A little bit on the bearish side, perhaps a little correction occurring. Let's zoom out a little bit on the movement that has been doing in the last couple of days. I'm going to zoom out for monthly date. So one of the last episodes, we were at about the 40K level. I made the prediction that in order to talk about a new bullish cycle, a new bull market, that I want to see a breakthrough above the 40,000 USD dollar range, and that it must consistently do so. After the episode, I saw an immediate decline once again, but as you guys can see here, starting from Wednesday, 4th of August, little dip before we started a new leg up. Now, we might say in the last couple of days, we have been consistently trading above the 40K level and currently are trading, well, at average the last couple of 2-3 days around the 45,000 level. There I say we are in a new bullish cycle. Like I said, the very first parameter already has been ticked off. We are trading above the 40K level. But are we consistently trading above the 45K level? Well, some might say, yeah, it is the next leg up. We are going towards a 3-day period where it's above the 45,000 USD dollar in value level, in that range, the 45K range. I dare say, let us wait a little while. Like I said, I want to have the second part confirmed and consistently for a longer period of time have a trade above the 45,000 range. Currently, we're back at around the 44K, so it broke down a little. Though I must admit, in my previous episodes, I made mention consistently above the 42, 43, even 44K level. So we might say this is a small, well, I can confirm it's a little bullish cycle, but in order to be sure we are in the next leg up, and with that I mean up and about towards new all-time highs, as a lot of traders made a prediction that by the end of 2021, would be hitting 100,000 USD value for one Bitcoin. Well, on that occasion, it needs to get up more and needs to trade at higher levels. So that's one of the reasons why I said I want to see it consistently trade above the 44 or 45K range. However, what is sparking this, well, sudden uptick? For that, I'm going to share a date here. You can see here, this was the range we were in about a week ago. Well, about a week ago, I was talking here. It went down, and suddenly we have an indication at the start of a new bullish cycle. Despite what some Bitcoin maximalists might believe, this cycle is being spurred on by nothing other than Ethereum. So despite Bitcoin having dominance in the market, in this case, it's actually Electrum carrying, my apologies, it's Bitcoin carrying not Bitcoin, I'm losing my words here, it's Ethereum carrying the market. It has to do with the theme of today, mainly EIP-1559, or also called the London hard fork for Ethereum. Now, what is it? It's a long anticipated update towards the Ethereum main blockchain. And it's actually an improvement proposal. That's why it's called EIP. EIP stands for Ethereum Improvement Protocol or proposal, and 1559 is a simple designation. It has been incepted, the idea at least, by Vitalik Buterin somewhere in 2019, if I'm not mistaken, somewhere in November. And it actually falls in line with the plans of Ethereum adapting its blockchain to a new consensus protocol, mainly proof of stake. The very first upgrade here, or update, I must say, mainly is about transaction fees and gas fees. What does it do? Well, you can see it here on screen. I'm going to read it all aloud. So EIP-1559 is a proposal to reform the Ethereum fee market with the following key changes. Current gas limit is replaced by two value, long-term average target equal to the current gas limit, and a hard per block cap, twice the current gas limit. So this is telling us that it's an update going to be about, well, transaction fees, that there is a new mechanism in place to calculate transaction and gas fees. And they also tell there's a base fee, which is being burned, which transactions are required to pay, which gets adjusted to block on block basis, blah, blah, blah. So this actually refers back to the previous mechanism, by which they say from this point on, the transaction or gas fees will be burned. Burned, how so? Well, it's a little bit like token burnings. This is being done to provide scarcity on the market of a set token and to, well, not minimize, but reduce the liquidity of the coins in circulation. It spurs value and can, in this sense, it's something about tokenomics. I'm not too big of a fan of it, but it actually spurs on investors to invest in the project by reason that the tokens held will suddenly start increasing in value. That's what burning generally is about. So the EIP 1559 update is about implementing a new mechanism that will decide on how high the transaction and gas fees are, while at the same time the gas fees or transaction fees from this point on, well, starting from the 4th of August, are being burned, so taken away out of circulation. Some people have already asked me multiple times on Quora, Twitter, Facebook, etc., even in private messages on Instagram. Yeah, but where otherwise would those transaction fees have gone to? Normally, transaction fees, gas fees are being paid to the miners. On that account, before the 4th of August, Ethereum worked more or less the same way like Bitcoin, by meaning that miners mine blocks, they get rewards, Ethereum in this case, as a reward, but they also validate and verify transactions. With that, I mean they take up the transactions from the mempool, which is some kind of space where all transactions are temporarily being stored before being saved and registered, validated on the blockchain. In order for those transaction fees to be picked up, well, transactions to be picked up, it's actually the transaction fee who puts in its weight. The higher transaction fee, or the higher the fee paid for the transaction, the more quickly miners will actually put it and save it on the blockchain. This implies there's an entire mechanism behind it, that the highest fee paid will be the fastest one being saved on the blockchain. It implies there's a mechanism of priority. That's something all PoE and POS, so proof of work and proof of stake based blockchains and other variables where miners and masternodes, etc., are present, work with. Now, Ethereum did so by reason, well, they wanted to create some scarcity. And, well, others who follow my other live streams know I find it a little bit of a bad move by reason, well, your miners, which are the backbone of the blockchain, as a result, are being paid less. How much less? Well, about one third of their total income from mining is being taken away. It's being burned, literally. Um, Currently in the market, an exodus, and it's not frequently seen, but other projects pretty much underline it, especially one of my favorite projects, Ravencoin. Well, they see there's an exodus going on from Ethereum towards their own blockchain by the miners. By reason, well, if you start mining cryptocurrency, well, you want it to be profitable. You want to get out of your cost. Naturally, your mining rig takes up space. It has been paid for. There are electricity bills which you need to take into account, etc., etc. Before to start mining, and I explain it in detail also in my crypto mining course, you need to do a profitability calculation. You need to see if mining a certain coin with your GPUs or ASIC in the end is still profitable by deducing all costs you make. And well, a lot of miners had very, very small margins, very, very small profits. Kept on mining because, well, there was profit still to be made, but it was like, I don't know, 2 or 3 euros a day, perhaps. It's good. It's nice. You can keep on mining by reason. If you mine, it's all about accumulation and helping to secure the network. However, since the transaction fees are being burned and one-third is gone, a variety of miners, quite a lot even more than I suspected, well, don't get their profits anymore. They're in the negative. So they are being forced to jump ship. So they no longer can mine Ethereum and are searching for more profitable blockchains. Ravencoin is one of the big ones and has been growing consistently in the last couple of days. So that's actually a good sign. Anyway, let's continue about EIP-1559. Is it good? Well, here they say there's a mismatch between volatility of transaction fee levels and social cost of transactions. So they underline there is a problem on the Ethereum blockchain with its transaction fees. It is currently known, it has been always known, that Ethereum is the blockchain with the highest transaction fees on the entire market. It is even so high, and I also mentioned this in numerous of my other live streams, that its transaction fees are that high that there's actually a reduced supply in circulation because of it. What do I mean with that? Well, there are a lot of people, myself included, who have small amounts of Ethereum locked away somewhere on an exchange or in private wallets. Now, in order to move those funds, well, you need to pay a transaction fee. But if we talk about 20 euros, for example, in Ethereum, and you want to move it towards, well, another wallet that you can exchange it, well, a transaction fee needs to be paid. And in certain instances, the transaction fee that needs to be paid eclipses the amount that is being held in those private wallets or in those exchanges. What happens is you've got an enormous amount of Ethereum being locked in place that cannot be moved by reason the transaction fees are way too high. And well, this actually reduces the circulating supply. And it's something which has become quite obvious during bull runs for the entire market. I'm going to show a little graph here. So this graph, I'm going to zoom out a little bit. 1 year, there we go. These are the average transaction fees expressed in USD dollars for Ethereum. So as you can see here, in September 2020, I know I designated a few times, it's the sort of the bull run. However, for altcoins such as Ethereum, it happened much later. So you can see we had an average transaction fee of 6.62, relatively stable. And well, as soon as Bitcoin started to soar, starting somewhere in December up until March, that it reached its first new all-time high, transaction fees, well, started to soar as well. This was very first phase of altcoin season. What did we see? The average transaction fee of Ethereum, well, clocked in at about $38. So if you wanted to move anything underneath 40 Ether, you couldn't move it. Under 40 Ether, sorry, under $40 worth of Ethereum, you couldn't move it. That's how you should interpret it. Now, the all-time high for the entire market was made in May of this year. As you can see, we were almost at $70 US. So all funds underneath $70 couldn't be moved. You would be making too much of a loss. Anything above it was free to go. However, it's better to say we walk in ranges. If you had $100 in Ethereum and you had to pay $70 in Ethereum for the transaction fee, you ain't going to do it. That's something only reserved if we are literally talking about tens of thousands of USD dollars. So a lot was locked in out of circulating supply, which is also the reason why it quickly crashed down. No one could move their funds by reason transaction fees were too high. However, will people say, luckily with EIP-1559, there's a new mechanism in place which enables all the transaction fees to be reduced. Now, some will see here, yeah, it has been reduced. You see here in May, we crashed, topped a little bit and went down as the markets cooled down. We had a period where Bitcoin was at a range of trading in the 30K and 40K levels. Mentioned it numerous times in, well, these live streams, trading range, how it would evolve, etc., etc. Didn't really make mention of the evolution of the Ethereum gas prices, but as you can see, they were equally low. They corresponded with market movements. However, starting 4th of August, EIP-1559 has been implemented. And as you could see here, everything about it is to reduce the transaction and gas fees. Did it work? Not really. As you can see here, there was a little uptick starting somewhere from July 25th. People started hyping the Ethereum London hard fork, and the market became slightly bullish, and you can see it even here. Come on, get down. I'm going to zoom out a little bit more. There we go. So 25, we are approximately here. There was some good news. There was the B word. Market was in uptick, and as you can see here, 25, Ethereum gas fees started to increase once again as the market became more bullish. Went upwards, la-di-da-di-da, and here, 4th of August, everything remained normal. We had a little peak. That's the moment when EIP was being launched, 1559. It was about here somewhere, quickly crashed down, and then we started a new bull run being carried by Ethereum. However, what do we notice here? August 4th, approximately, is situated here. It was stabilizing. The market started making its run, and we see a sudden explosion towards the upside, which quite frankly puts it once again, the average transaction fee of Ethereum, at about the same level as you guys can see here, 23rd of May, a few days after the new all-time highs, when the market was still trading quite highly in big volumes on Ethereum. So what can we conclude? Well, that EIP-1559, some might say it's still too early to make, to draw conclusions. I dare say the problem hasn't been resolved, and it is actually quite easy to see why. A common problem, and I've spoken with a lot of Ethereum miners, well, they say the implementation of the mechanism is decent. It's nice. It will work on the sole condition that the block size is to be decently increased. Either that, or during markets where we are trading normally, that there aren't all too much transactions being made on the Ethereum blockchain. Why do they put it this way? Well, quite frankly, the block size of Ethereum is too limited. Each and every block mined is being pushed full of transactions. The high transaction and gas fees are not a result of a flawed mechanism and isn't a fault of the miners. It's an inherent fault of the blockchain of Ethereum itself. By reason, well, their block sizes aren't big enough. Each and every block is plentiful of transactions, and there's almost no space to store additional ones. So a priority mechanism is actually taking over the entire transaction gas fee price range. With that, I mean the miners are simply doing their work, they validate and verify, but they need to make profit. So the automated systems of mining say, okay, we prioritize the transactions with the highest transaction fees, which results in, well, these movements. As you can see here, market is back in an uptick. It's increasing once again. But if I zoom out, that's exactly the same mechanism which occurred during this entire bull run. We're at levels which are approximately equal to February 2021, April 2021 also. So yeah, which have been present for a long time. And it makes me believe that the implementation of EIP-1559 was for naught. It didn't solve the issue of the high transaction fees of Ethereum. In the Dutch live streams, I've already said EIP-1559 is actually the very first update that will reduce Ethereum to the status of shitcoin status. The only thing going for it is its high value as a direct result of what I mentioned before, its high transaction fees, whereby people cannot move their Ethereum. By reason, it's Ethereum made out of circulation, means there's implied scarcity. There is less Ethereum to buy, which drives up its value. That's a direct result of those transaction fees. It's an inherent flaw of Ethereum that gives it its high value. Many projects naturally are also built on Ethereum, which also adds to its value. However, I hear more and more projects actually wanting to bail out from the blockchain itself. I wouldn't be surprised in the future, and I'm really talking about 4 or 5 year times, 4 to 5 years of time, well, that those projects will be gone and Ethereum will come crashing down badly. A little bit like a Peercoin in 2013, 2014, or 2017, 2018, somewhere. Peercoin was a predecessor of Ethereum. Both projects aren't related. Peercoin was actually the very first proof of stake blockchain project. High hopes. For some time being, it was highly ranked in the top 5, but suddenly disappeared and went away. Which is a bit sad, but yeah, that's the future which is in tow for Ethereum. Ethereum itself, with its proof of stake, well, for development platform, in my live streams, the Crypto Bull always say proof of stake is a decent consensus protocol if you call yourself a decentralized, a platform for the creation of decentralized applications. For that, it's good. Ethereum currently still is proof of work. So in a sense, I'm happy to hear they want to address their scalability issues. They want to address the problem with their high transaction fees. However, they are going about it quite wrongly. I'm going to see what this is. Yeah, this is actually from Ethereum website itself, London upgrade, and a high explanation, which we'll do, but I actually made my point entirely. For you guys that want to look it up, simply go to ethereum.org. In the search bar, type EIP-1559, and you get this page. Read it at your own leisure. So yeah, that's a little bit the story about EIP-1559 and why it's actually carrying the market. I'm going to stop sharing my screen here. There we go. So yeah, I hope this little blockchain talk enlightened a few people about the recent update about the London hard fork of Ethereum, and actually made clear the current problem that is present on the Ethereum blockchain, and that even with this update, well, the issues aren't being resolved. We are the 12th, so almost a week later than the update that has been implemented, and more people are actually complaining about, well, the transaction fees are still going up. Now, there are a variety of articles on Cointelegraph that I've seen passing by, whereby people say, yeah, but despite the burning of the transaction fees, miners are still in profit. Some of them are, not a majority, by reason, well, since implementing the update, well, naturally, we came into a new bullish cycle. There was an uptick in value across the entire market, which implies some miners still make profit despite having lost 1/3 of their income that they generally had from the transaction fees. Those guys are lucky that the market is in an uptick by reason, well, they can still say, okay, I'm still making profit, I'm not in a loss, I can continue mining. But it won't take all too long before those same guys will be saying, okay, especially if market's going to have a little dip, which I need to share the screen once again, which seemingly here is a little correction going on. Wouldn't be surprised if it sets through and, for example, falls back towards the 40K level. Those miners will also say, okay, I can't make any profit anymore. I'm going to cut off. Hash rate on the Ethereum network is going down, and, well, yeah, loss of value and even less security being present. Now, I've got to admit, I haven't really looked up the current hash rate of Ethereum. It might be nice to see how it's evolving here. July 21st, but that's on a yearly date. I want to see it up close. You can see here, well, there was an uptick. However, it's a little bit odd. By reason, I expected the hash rate to go down a little bit. To minus 600 terahashes last week. 577. Okay, well, I expected the hash rate to go down much worse. There was a very big downside here. It's on the correction. Anyway, yeah, a bit surprised about that one. Any case, you never know, perhaps more and more are still remaining on Ethereum and doing both at the same time. I haven't got a real explanation for it, really. I was expecting it to be lower, starting from August 4th, but all I can see is an increased amount here. Might be the case some miners have restarted their, well, in the run towards the EIP-1559 that they expected bigger returns by reason of increased value of Ethereum by reason of the burning the transaction fee. So they had reduced rewards in Ethereum, but are being compensated by the increasing value. So that might explain why the hash rate didn't crash down as bad as I thought it would, and is even on the climb here. However, it might change, and that's only a wild guess and estimate from my part here. As soon as the market starts dropping down a little bit, and for example, if you have a sudden drop down towards for Bitcoin towards the 40K range, and Ethereum falls after it, well, it might be a case we can see a little dip straight down back towards 500 terahashes or less even. All depending on, well, how the market evolves and how miners can still on weekly, monthly basis. So yeah, we shall see how it goes. I'm going to remove it. And with that, I want to conclude this episode from the, I want to say Crypto Bull, no, from a blockchain talk. Thank you guys for watching. If there are some questions or remarks, just put them down in the comments below. If you like these videos and all of my other live streams, please share, subscribe, etc., etc. Give it a shout out on Twitter, and hope to see you guys soon in the next episode. Bye.